4 billion JUP tokens are going to be given away to nearly 1 million Solana wallets. These will be the biggest airdrops in Solana's history from a team that's building a crucial piece of Solana's DeFi ecosystem. We'll do a deep dive into Jupiter, the JUP token, multiple ways you can check your allocation. We'll dive into potential price action and how you can play this as an investor and a trader. All right, let's dive on into it. All right, now a bit of context on Jupiter and why it's one of the most important players in the Solana ecosystem. So in any DeFi ecosystem, you have DEXs, decentralized exchanges, to swap tokens. Now this is a basic DeFi service. Jupiter launched in October 2021 as a liquidity aggregator for token swaps. Now this is similar to 1inch on Ethereum. Now what swap aggregators do is they help you find the best price to do swaps, right? So that means rather than having to shop around different DEXs like Orca or Radium on Solana to swap, say, USDC to Solana, you can just use Jupiter and it'll automatically find the best DEX to give you the best price at the time of the token swap. Now this means aggregators naturally become one-stop shops to do your token swaps. Now, as you may have observed, the Solana of 2024 is a hugely vibrant community and ecosystem. Right? It's seen a renaissance since the FTX collapse over a year ago. And as a layer one, it has compelling technology that allows it to do certain things that many builders still contend can only be done on Solana, thanks to its speed, scalability, how fast it finalizes transactions, and so on. I've talked about this in my Solana overview video, which I'll link above. Now, it's no surprise then that Jupiter, right, the first port of call for many users looking to swap tokens, has seen huge trading volumes recently, especially during Solana's run-up to $125, a whopping 15x from the FTX sell-off lows a year ago when Solana hit as low as $8. So far, in terms of stats, there's been 1.2 million transactions processed on Jupiter to date, which amounts to around, I believe, 66 billion in total volume. In fact, the platform does roughly 70% of organic volume for all Solana DEXs, right? So Jupiter, it's really become the platform of reference for all retail traders on Solana. Right? It's a flagship piece of infrastructure for the Solana ecosystem. Now, beyond swaps, nowadays you can do so much more on Jupiter, right? You can do on-chain limit orders, which further eliminates one of the reasons to trade on a centralized exchange such as Binance or Coinbase. Now, I often use these limit orders to automate selling tokens when they hit certain price points, which is super useful. Here you can actually see a bunch of meme coins I am trying to actively get rid of, and being able to set these sell orders like I would on a centralized exchange saves me a lot of hassle and time. You've also got the ability to DCA, right? Nice, a very useful tool for longer term investors, right? You can easily dollar cost average your hard-earned money into tokens you believe in on a regular basis. And they've also recently added perpetual futures. Now this is like GMX on Ethereum. Maybe I'll do another video on this. And just a few days ago, the team even kicked off their own Launchpad, which is about to launch their own meme coin. Now I've got an allocation, so this is the Launchpad. I think I've got an allocation, there we go, of the new WEN meme coin myself. I'm itching to claim, maybe I'll do that after recording this video. And there's even a decentralized stable coin called, I believe, SUSD, Solana USD. I'm guessing that's what it means, what it stands for in the works. So kind of similar to the DAI stablecoin on Ethereum. So that's Jupiter's growing list of features and services in a nutshell. There's a lot. Now, if we zoom out a bit, the Jupiter team has three main, I guess what you can call business anchors. So number one, delivering the best UX possible. Right, now this means giving people a centralized exchange experience, but in DeFi. Right, and this actually ties into the next anchor really well, anchor number two, which is maximizing the potential of Solana's formidable technical capabilities. And so providing a Binance-like experience in DeFi, it's going to mean squeezing the most you can out of Solana's cutting-edge technology. Now, a few years ago, I covered Serum and Radium, and that was seen as cutting edge at the time because of their central limit order book, right? A capability that was restricted to centralized exchanges before Solana came along. So Jupiter's quite committed to continuous innovation and squeezing as much as they can out of Solana's technology to build great DeFi products. Finally, business anchor number 3, improving Solana's liquidity landscape overall. Now, this is something that Jupiter is in a prime position to do, since they pretty much sit at the center of Solana's DeFi ecosystem. Now, this post that I'm showing here on Twitter/X is from the Jupiter co-founder, who goes by the handle Meow. And reading it, you can see he's trying to bring alive the things that I just mentioned, right? Delivering the best UX, best in class UX, leveraging the best in class technology, improving liquidity, right? And if we zoom out even further, I guess what all of this means is that number 1, Jupiter is going to be crucial for Solana's long-term adoption, which is currently going really well. And number 2, Jupiter is going to play a part in DeFi becoming more and more mainstream, attracting that Web2 audience, onboarding the Web2 masses, getting people to see the power of DeFi. Now, with that background on Jupiter out of the way, let's talk a little bit about the JUP token. So JUP was announced by Meow at Solana Breakpoint in 2023. This was in Amsterdam. So here's a video of his talk. Great presentation, quite insightful. Pro tip, if you are going to watch this video, I suggest watching it 0.75 speed. Meow's a very smart lad, and he talks pretty fast, right? Maybe this is the first video ever you actually want to watch slower than 1x as opposed to faster at 1.5 speed, 2x, what have you. So, all right, back to JUP. This is going to be Jupiter's governance token, right? Which means that it's going to allow holders to influence crucial aspects of the ecosystem, which by extension is going to influence the direction that the entire Solana DeFi ecosystem might take, given how central Jupiter is. Now, staying on the theme of governance tokens, here's something you may be able to relate to, right? You can think of JUP as like Uni, right? The governance token of Uniswap. Now, Uniswap symbolized the first wave of DeFi, which happened back on Ethereum a few years ago, with all of its lovely gas fees. And Jupiter, you can say, aspires to embody the essence of DeFi 2.0 on Solana. So in a nutshell, the JUP token marks a milestone in Jupiter's development and ethos. And if you are eligible for these tokens, you're about to be part of that milestone. Okay, so on to the free airdrops. So 3 things I need to talk about. First up, it's not technically an airdrop, right? An airdrop implies that it's going to get dropped into your Web3 wallet, such as your Phantom wallet. Here, you're going to have to claim your JUP tokens after the token generation event on January the 31st, right? That's the key date, January the 31st. Secondly, there's going to be a series of airdrops, with the first one happening on Jan the 31st, right? So here, 10% of the total supply, right? The total supply is 10 billion tokens. So 10%, that's 1 billion tokens on Jan the 31st is going to be given out. And that brings me to the third point, which is who is eligible for an allocation, right? Who is eligible to get some JUP tokens, and how many of these tokens are you going to be able to get? So here, this is where I want to draw your attention to this article, right? This is by the analyst ALO. I'll link this piece in the descriptions down below. It's a breakdown of everything around the airdrop. Quite an informative piece with some nice diagrams and tables as well. So if I scroll down to the airdrop breakdown section, right, essentially, so I'll start from the high level. In short, there was a snapshot that was taken on November the 2nd last year, right? November the 2nd, 2023, and the 955,000 wallets that interacted with Jupiter before that snapshot, they're the ones that are going to be eligible to claim an allocation, these wallets. So if you use Jupiter at all before November the 2nd, you're going to get at least 200 JUP tokens. And then on top of that, you're going to get more JUP tokens by hitting different tiers of swap volume. So for example, if you swap roughly $1,000 worth of tokens, you're going to be in what's called tier 4, right? Which gives you roughly 1,000 tokens, right? And one of my wallets hit this benchmark. If you swapped roughly 10 grand worth of tokens, if that was your trading volume, you'll be upgraded to tier 3, where that wallet is going to be eligible for at least 3,000 tokens, right? And 2 of my wallets got into here, right? Mostly my wallets, on trading NFTs. It was one of my Steppen wallets, trading NFT sneakers there, and also I believe the wallet I used for playing the heist. I did some good trading in there, and that wallet is going to be able to get me at least 3,000 JUP tokens. And then if you're more in whale territory, so hitting volumes above $100,000, you'll be able to claim more than 20,000 JUP tokens. And you might even be able to get more than 100,000 JUP tokens for those hitting volumes into the millions. So those who are using JUP last year are really going to be rewarded, which will be a lot of Solana users, since JUP is the top swap aggregator. It's the one-stop shop that many people go to trade tokens on Solana. And the funny thing is, and I'm just kind of reflecting a little bit out of interest, the funny thing is, if you knew that all of this was going to happen, this airdrop was going to happen, you're going to be eligible for these JUP tokens, you could have basically just wash traded with yourself, swapping between, say, USDC, USDT in 2023. You'd pay a tiny amount of fees, and then you'd be rewarded with essentially 20 to 30% of your trading volume. So absolutely wild, just kind of think about that. All right, so moving on to checking your eligibility, right? So how do you exactly check which of your wallets are eligible for a JUP allocation? Now, there are two good methods. The first one is the, I guess you can call it the official method. So here you go to Jupiter's site. I'll be very careful to click on the right link. I'll leave the right link in the descriptions down below. Clicking on wrong links and connecting your wallets in Web3 is one of the easiest ways to get hacked and lose your crypto. Now what you'll do is you'll go to this official site, you'll connect your Solana wallet, and you'll be able to see whether that wallet is eligible for anything and how many tokens you're eligible to claim. And then if you have multiple Solana wallets that you want to check, you just disconnect them one by one, connect the next one, and you'll be able to see how many JUP tokens each wallet is up for. So that's the official method. The next method, and I quite like this method, it's very convenient and, in my opinion, safer, is you use this Solana Airdrop Checker tool, which was developed by a member of the Solana community. I'm going to give him a shout out, Sujiko. So here on this tool, you can put in multiple wallet addresses at the same time and see airdrop allocations that you're up for. Right. So here for JUP, I've put in 3 wallet addresses. 2 of them are going to be, I'll be able to claim 3,200 tokens, and then one of them I can claim 1,200 tokens. Now, pardon me if I blur out some of my addresses here, just out of privacy. Now, I really like this tool for a few reasons. Number one, you don't have to connect your wallet, which is convenient and safe. Number 2, you can check multiple wallets at the same time, up to 5 at a time. And number 3, it's a handy one-stop shop to actually see airdrop eligibility for a range of tokens, right? Not just JUP. So here we can also check out my Pyth allocation, Jito allocation, 2 other really major airdrops of recently. And I'll talk more about Pyth and Jito very soon, because that's going to help us actually work out a fair price for the JUP token. Anyway, Solana Airdrop Checker, great tool. I really like it. Check it out. How high can JUP go? When to buy? What's a fair price? All right, so the story is you've checked your wallets, you're eligible for some JUP, or maybe you're not eligible and plan to buy some because you're bullish on Jupiter and Solana. A couple of questions you're going to have on your mind is, well, number 1, what's a fair price for JUP on launch day? And number 2, how high can JUP go, at least in the short term? So here I want to go back to Alo's article earlier. So he performed a data-driven analysis on JUP price action from several approaches, several angles. Now I'll leave you to read the details. Again, the description, the link to the article is in the descriptions down below. But in a nutshell, what he did was a price action analysis on the recent Jito airdrop. Now this was another huge Solana airdrop from Jito Labs, which is the liquid staking platform for Solana. Right, so you've got Lido for liquid staking on Ethereum, and we've got Jito for liquid staking on Solana. So looking at price action and trader behavior of Jito, and again, I'll leave you guys to check out the details. Alo speculates 3 things for JUP if things play out as similarly as it did for the Jito airdrop. Number 1, the first day of JUP trading is going to be highly volatile. I don't think anyone is going to be terribly surprised by that, but this will be a good opportunity for traders. Number two, there's a good chance there'll be significant excitement over JUP. And so that means that the token might peak in price somewhere over the first week, which means it might not be the best idea to JIT all your JUP tokens straight away, sell them straight away. On the other hand, if the price doubles since launch, it might be a good idea to sell and take some chips off the table. And finally, if the price dumps 50% at any stage, ALO argues that it might be a good buying opportunity to accumulate some more JUP. Now, I've gone and reconciled these observations against the JUP, against the Pyth airdrop as well, and it holds up quite well. Right now, Pyth is the governance token for the Pyth Network, which is a decentralized oracle for Solana, along with a bunch of other blockchains. Think of Pyth as kind of like the chain link for Solana in a nutshell. So I wrote a detailed thread on Pyth along with the airdrop a little while ago on Twitter, and I'll link it down below. Anyway, the takeaway is JUP, Jito, and Pyth have been the major Solana drops lately. All three are hugely important projects or infrastructure projects seen as pick and shovel investments for Solana. And ALO's suggestion is that if the JUP airdrop plays out like the Jito and as I verified, like the Pyth airdrops, expect volatility, expect the token price to appreciate after launch, fingers crossed, and perhaps big pullbacks like 50% represent good buy opportunities. We'll see what happens. All right, fair price for JUP using ratios. So ALO also uses some sophisticated methods to try and work out a fair price for JUP. This is not trivial. Bear with me, it does get a little bit complicated because there's no easy way to work out what the price of JUP might end up being, what the fair price is. But I'll try to summarize his particular approach, which I found quite interesting and quite fair. So the TLDR is 80 cents to $1.20 is what ALO works out to be a fair price for JUP. How does he do that? So in a nutshell, what he does is use ratios on when the Jito airdrop from a little while ago was overbought and oversold, and extrapolates from that to then work out when the price of JUP will be overbought and oversold. And this then allows him to carve out that 80 cents to $1.20 price range that he believes to be fair price. All right, so let's dive into this argument a little bit deeper. First up, just a quick word about ratios. So ratios are quite common in trading and price analysis. For example, here's one you might be familiar with, the ETH to BTC ratio, basically the price of Ethereum divided by the price of Bitcoin. If you want to compare valuations, market caps overall, you might take the market cap of Ethereum divided by the market cap of BTC, right? Either way, it's a similar argument. In this case, ETH to BTC ratio, it'll help traders identify when ETH is outperforming or underperforming against Bitcoin, right? Which then helps you, number one, work out when it's a good time to potentially rotate capital, money, liquidity from Ethereum into Bitcoin or vice versa. And number two, when the sentiment might be switching from Bitcoin to altcoins or vice versa, right? It really gives you an idea of the risk sentiment in the crypto markets. That's how this is, that's at least how the ETH to BTC ratio is commonly used. Now, going back to JUP, so what ALO did was to first compare the Jito fully diluted market cap to the Lido fully diluted market cap, right? So basically grab the valuation of Jito divided by the valuation of Lido. Now, why would you do this? Well, because they're both in the business of liquid staking, right? Jito is liquid staking for Solana. It's the flagship liquid staker for Solana. And similarly, Lido is the liquid staking platform for the bigger brother Ethereum, right? So that means it's the closest apples to apples comparison that you can make, right? In a certain area, in a certain niche. And so like the ETH to BTC ratio we just saw, here you're going to get a chart, right? The Jito market cap to Lido market cap ratio, where as the graph goes up, the market is essentially valuing Jito higher compared to Lido, eventually pushing Jito into overbought territory. Maybe a good time to sell. And as the chart trends down, the market is valuing Jito lower compared to the benchmark Lido, eventually pushing Lido into oversold territory, which implies maybe it's a good time to buy. So what does this data say about when Jito was overbought and oversold? Well, when the Jito valuation reached roughly 2, right? So roughly almost hit the double that of Lido's, Jito went into overbought territory, right? The ratio then trended downwards before rebounding at around 0.4, meaning that when Jito's market cap, its fully diluted market cap, its valuation faded back to around 40% of Lido's, then Jito became oversold, right? So the magic numbers here are roughly 2x and 0.4x. And the idea is you can now, and this is what ALO did, extrapolate these numbers, right? So 2x for overbought, 0.4x for oversold, port them over to JUP and try to work out when JUP might be overbought and oversold, which then gives you a price range to identify when what the fair price of JUP, the JUP token, might be. So what ALO then had to do was plot hypothetical values of JUP, right? Different values of the JUP market cap against the valuation, the market cap of the equivalent platform on Ethereum for that apples to apples comparison. Now, I hope you're still with me. Here's where things get a little bit more complicated. There isn't a single platform on Ethereum that does everything Jupiter does, right? On Solana, which is swapping, DCA, perpetual trading, launchpads, what have you, a lot of things. So what ALO did was use a combination of Ethereum platforms, right? There's Uniswap, dYdX, DAO Maker, which together he argues represents the closest peer competitors to what Jupiter does. And so putting everything together, he mapped the 2x and 0.4x overbought and oversold thresholds that he got by looking at the realm of liquid staking, right? Which is not what Jupiter does. It's a different area. Ported that over to Jupiter, right? To work out that a fair price of 80 cents to $1.20 for JUP being fair price. And those 2x and 0.4x thresholds also then allowed him to extrapolate that anything above $1.60 would be strongly overbought and anything under 40 cents would be strongly oversold for JUP. Will he be right? Well, we'll see. If you're watching this a week or a month from now, maybe just to learn a bit more about Jupiter, and you already know how the price action ended up playing out, do let me know in the comments below whether this analysis was on the mark or not. I am looking forward to seeing what happens and how it plays out. I also want to briefly touch on the current market conditions, right, which might affect how things play out with the argument above. So as you may have seen, the crypto markets are currently cooling off a bit after the stellar run-up in anticipation of the Bitcoin spot ETFs. That narrative has now played out, right? We've got our spot ETFs, and liquidity, to be honest, has been a little bit disappointing. We've seen a lot of money rotating from GBTC into the spot ETFs, but not nearly as much liquidity, new money, as investors have been hoping for going into the spot ETFs. So Bitcoin has pulled back a bit, altcoins have followed, and this could affect how JUP ends up performing on drop day on Jan the 31st. So we'll see what happens. Okay, now I want to talk about different approaches and strategies that you can play JUP as both an investor and a trader based on different risk profiles. So here I want to draw your attention to Gumshoe on Twitter/X, who suggested 5 different approaches or personas, and we'll go from the most risky down to the least risky. So the first 2 approaches relate to being essentially JUP degens. So in short, this means you're going to keep most of your JUP tokens when it gets launched and try to actually get more JUP tokens at any good opportunity. So you're a JUP maxi, so to speak. Now this is high risk as you're putting your eggs into one basket, essentially focusing mostly on one altcoin. The third approach is the middle of the road approach, or as he calls it, average risk. So this is where if the JUP price goes above a certain point, say $1.50, you start selling, right? And if it pulls back enough to say 75 cents or lower, you DCA in. So otherwise you hold on to your JUP tokens. Sounds sensible. And the fourth and fifth strategies relate to, so this is for the risk averse. Basically, when JUP comes online, the approach here is to sell most of it or all of it into Solana or stable coins, and then buy more JUP if the price pulls back enough. So this is really for those who want to de-risk and take most of their chips off the table straight away as soon as JUP launches. So a variety of different strategies and approaches. You'll need to figure out what works best for your circumstances. Finally, I want to talk a little bit about how this JUP airdrop might affect your broader crypto strategy. Now, the reason for this is, look, there's going to be a hell of a lot of wallets getting these JUP tokens, right? Up to almost 1 million wallets getting, well, it's going to be a total of 10 billion JUP tokens over time, but at least a billion is going to be given out on Jan 31st. So this is going to be the biggest airdrop in Solana's history. The ecosystem is going to be awash with what amounts to be a fairly major liquidity injection, which means we're going to be seeing a big increase in on-chain activity post JUP launch. There's going to be a trickle-down effect of all of this money across Solana and the broader crypto landscape. So here are some things to think about, right? Many risk-averse JUP recipients are going to swap their JUP for Solana, right, for Sol. So does that mean that Solana prices might pump? Or maybe that's already been substantially priced in, right? Something to think about. And then you have the risk on degens, right, who will rotate their JUP tokens further out on the risk curve to chase a higher but riskier set of returns, right? Does that mean many smaller alts, including meme coins, NFT projects, are they going to start pumping, right? I've got positions in certain meme coins. I've got a lot of NFTs. My meme coins, some of my favorite ones, if I can associate favoritism with meme coins, they are trading sideways. Maybe it's time for them to pump, right? Who knows? We'll have to see. Will some of all of this JUP liquidity rotate to projects from even other chains, right? For example, people selling their JUP to buy other L1s and L2s, right? So a lot of things to think about. Anyway, I think I'll leave it there. This was supposed to be a 5-minute video, but I'm almost 100% certain it is a lot longer than that. If you found this video useful, please smash the like button and feel free to drop a comment. I'd love to hear from you. I do a lot of Web3 dives on Twitter/X, along with Medium as well. And so be sure to follow me there too. Stay safe, keep learning, always watch your risk, and see you guys next time.